Sense of Things. It's Jeff and Ron here for another weekly episode. And it's a lot of fun this week because we are at the 54th anniversary of the moon landings. Ron, how you doing, buddy?
Very well, Jeff. Yep, actually, growing up, I was a bit of a rocket geek. So, I was barely a year old when the moon landing took place. But over the years, when you kind of learn about the technology from then versus the technology now, I mean, it's almost a light year difference, no pun intended.
Absolutely. Well, and I mean, for me too, we were talking before the show that, it was always the thing for me too. I mean, we grew up in the space generation, and, really we grew up in a world where, it was the first time man had stepped off the planet and stepped onto another planet. So really cool stuff. And I think a lot of amazing things came out of the space, world. I mean, we have Velcro now. We have, all these
Silicon
things.
chips. I heard it was another one, right?
Silicon chips, Tang. I was just reading a little thing about this, that Tang was, became the biggest drink back then. It's just absolutely awful.
Yeah,
but
freeze-dried food.
Yeah, freeze-dried foods.
Not sure that was the good one, but that's all right.
But it is what it is, right? I think military MREs came out of this too, but that was not something not fun to talk about.
Well, we're talking about technology, travel, space travel. I just saw last week Back to the Future 4 is in production.
Oh, good.
Now, God bless Michael J. Fox. I've always been a big fan. And of course, why would terrible things always happen to good people? I don't know how he's going to get through that movie in his condition, but it should be interesting. I have no idea what kind of a storyline they're going to be. Hopefully they don't recycle like 2 and 3 and kind of have all the common threads. It's just going to be another horrible sequel, but
hopefully it's not an Indiana Jones 4 or 5 or whatever one.
You know what? Did you see? We don't have to. I didn't see it yet, but I did read the reviews.
Are awful.
Mostly mixed, but mostly bad.
Yeah, it's just awful. I mean, I just look at it as like, okay, I don't want to watch a movie. A hero of mine through movies all these years, and I loved every movie that was made, except for the second one was kind of crappy. But I loved all of those, and I don't need number 5 being the awful one that's like, oh, I'm in retirement. It's like Rocky 5. Same thing,
Rocky 5, like, there are like 9 Rockies.
Yeah, I think I've lost track of them now.
Yeah.
Now you're on to Creed and all those things, but you looked at it and it's like, man, Rocky 1 through 4, everyone was great. It was interesting. They had interesting characters, and then 5 is just the worst movie that ever Sylvester Stallone ever made, including Over the Top.
Look, if the Rambo 4 comes out, I think they should just shut down the theaters at this point.
Well, I think all these guys are like trying to make their last hurrah. He might be able to pull it off. I mean, he's still in shape. I mean, Harrison Ford looks like an 80-year-old man at this point. So.
Well, think about it. Sylvester Stallone's going to be 77.
Yeah.
He may have already turned. I know this year he's turning 77.
But he's still in great shape. I mean, I see him all the time on TV. He's in great shape. Human growth hormone is awesome. So.
Yeah, maybe he knows something we don't.
I guess.
I hear you. Right. What do you think about the market right now? July is still chugging along. We're melting up.
Your prediction or thoughts? I mean, definitely July is just off to the races. The Mighty 7 just keep being mighty. It was funny. I was doing a little bit of research for an article on the Mighty 7, and man, you look at the stock charts of all 7 of them, and they're all the same way, straight up, with very little variations each day. So,
and actually, the one thing that's impressed me about some of this, forget about the lack of breadth, although that's been coming up.
Yeah,
for summertime, the volume numbers have been really above average.
Yeah,
above average, which is shocking, right? We'll see what happens in August, because that's the big vacation month, especially for Wall Street.
But I think the different, it is the trading month, where Wall Street kind of goes away. But I think so much trading today is done via computers that I just don't think it really matters. I mean, computers don't take a vacation or take a break. And most of them trade off the headlines and what's going on. So, I mean, I honestly think the humans go and hang out at the beach in Long Island, and everybody else just, the computers just keep on rolling behind the scenes.
Well, it's very much of a cascading effect, right? We're going to talk about this in a second, that, one of the tailwinds has been employment.
Yeah.
And if people are working and they're making money and they're taking money out and putting it into the retirement plan, that money's getting sent into the retirement plan, and then the computer is then applying their contributions.
Yeah.
So that steady flow of, well, we got to keep buying this fund. We're putting money in the fund, and those fund managers got to use it to buy those stocks.
Yeah.
So the train keeps chugging as long as employment stays.
Yeah, I mean, and figure it. Yeah, as long as all these people are employed, they just keep putting money, like you said, putting money in, putting money in, and it's going into largely a lot of, I mean, you figure most of the major funds, the big, large funds, are probably invested in the mighty seven, and they just keep pumping money into them, and they keep going up. So,
well, I'll tell you what, I think I got a couple of slides here. The first slide is kind of a carryover from a couple of other podcasts that we've done, talking about the consumer, two specific things.
Yeah.
Obviously, one, that employment is good, but the interesting thing is that credit card balances are at an all-time high. Let me make sure you can say, you got the slide version of this?
Yeah, hang on, it's coming up. Yes.
Full screen, right? Okay.
Full screen.
So I thought this was interesting because this goes back 27, 28 years.
Okay.
Look at we've always talked about how interest rates on credit cards are like mob rates, right? Yeah. 15, 18, 20+%. Look at where we are right now on interest rates on credit cards.
Wow.
What is that? 22%?
22%.
Average. How can people even afford to make the minimum payments? I mean, they're going to be paying off that dinner they had 3 weeks ago for another 3 or 4 years.
Yeah. Well, I mean,
this chart is disturbing.
That balance, if you just pay the minimum, your balance basically is going to quadruple in 4 years. It's insane.
One of my investment themes for several clients has been digital payments, electronic payments, whatever, because how often do you take cash out of your pocket today, right? Yeah. Mostly everything is on a credit card. We want our points for travel or purchases. Of course, Amazon's hooked in everything, so you could use your points for Amazon stuff. Yeah. But at the end of the day, like, people are using cash less and less.
Sure.
So these credit cards are just, I don't know how the government hasn't stepped in, other than we both know, and I know we've talked about this before, these credit card companies are spending millions, tens of millions of money with lobbyists, with the government, to make sure that they have free reign on what they could charge. I mean, where's the consumer advocacy groups? Where is, I mean, if any other business did this, they'd be considered loan sharks.
Well, yeah. And I mean, you talk about, all this stuff that's hurting the poor and all this. Well, this is hurting the poor way more.
This is considered inflation, if you want to think about it, right?
This is beyond inflation.
Higher amount for goods, and now they're paying that much more if they're carrying it over. Yeah. So how are they ever going to be able to get out of that dark hole?
They're not.
I don't know. And over $1 billion now in carryover bonuses at an average of 22%.
Yeah.
Scary.
Yeah. It is scary. And you flip on the student loans in another month, and now that's gonna just, on top of all that, do it. And looks like the government's trying to, or the administration's trying to do another end around, using another way of, okay, we're going to forgive all this debt. I mean, it's just.
But I think what he can do as an executive order is like a fraction of what they wanted to try and pass through Congress. Well, I'm not justifying it. I'm just saying it's a fraction. But I don't think that's going to put a dent in the grand scheme of things, when a good chunk of the people that have as much credit card debt as they have now have an extra $300 to $400 they got to put
on
towards
top of it.
I mean, think of it, the bankruptcies are going to skyrocket.
Oh,
that's probably going to happen next year sometime, not right away.
Yeah, and I mean, my take on, from an economic standpoint, and we'll talk about that in a little bit, but I mean, my take on the economic standpoint, I don't think we see a recession this year. I mean, now everything I'm looking at is probably in 2024, early in 2024, we might see a recession at this point. I just don't see
And it depends on how you're defining recession, because
Yeah.
the way the economists do it, 2 straight quarters of negative GDP
negative.
growth, that's kind of BS, because if the GDP's at 3.5
Yeah.
and then it goes to 3.4 to 3.3, does that mean we're in a recession?
Yeah.
You got to, I think the employment number is a bigger indicator
I think
where
so
we
too.
are with a recession than the GDP today.
Well, and that's going to have the carryover effect to everything else. I mean, we're seeing a little bit of, and I know you've got another slide or whatever, but I mean, we saw retail sales this week, and they were certainly well below consensus, kind of at the bottom end of the range. So we're starting to see the cracks in the consumer a little bit more, which has really been, I mean, all year long, they've been just blowing and going.
And that's part of the issue is, look, even the best economists in the world don't fricking know when we're going to be in a recession or when the pullback is. So to time this thing is tough. And I've had some tough conversations with clients this year because of the first half movement. I'm like, look, 6 months does not a year make. I said, for the most part, whether we get a significant pullback the end of this year or the beginning of next year, it's going to happen. So probably a good thing to do is kind of initially look at some of the tailwinds, right?
Yeah.
We have a good, strong consumer. Despite the retail numbers pulling back, they're still spending money, right? Travel and hospitality spending has surged and stayed strong, at least through the summer. People want to get away, get out, completely blank their minds on what's going on, Albert. They want to have a good time. They're doing it during the summertime,
and
right?
I think, globally,
all-time low.
Yeah, and I think globally this year is really the truly first year without COVID being a major factor, where it's in the news and everything else. Even 2022, which was really that first summer of people being able to travel. I mean, I traveled overseas and they were still a little hinky about COVID and stuff like that. And, this is the first, I think, global summer where everybody's just like, I'm going to go out and enjoy myself and be out there.
And it started in May. It didn't start after Memorial Day. It started April, May timeframe. So it should be interesting. I thought some of the other numbers I was looking at was large businesses are still hiring, not at the pace they were. I think what they're doing, in my opinion, whatever the hell that's worth at this point, is I think they're upgrading key positions.
I think so.
So they're still hiring and they're upgrading, because small businesses, they are trying to hire, but many of them are not doing it at the pace they once were. And I thought the other big thing was, I believe now it's 5 straight quarters of negative earnings growth. The earnings were better than expected, but had slower growth from expectations. And I think a lot of these companies, you know how it is, figures lie, liars figure, is that they were lowering expectations to a point where they know they could jump over that bar, but it was still a lower expectation from where they were 6, 12, 18 months ago.
Well, I mean, do you think too, a lot of businesses, I know we probably are going to see at least one more interest rate raise this year, maybe 2. Do you think, I don't, and we've had this discussion, I don't think we're going to see an interest rate drop for quite a while. But what are your thoughts on it just stabilizing so that businesses actually have the ability to somewhat predict what they're seeing down the road?
Well, look, go back to some of our podcasts we did in April and May, when they were talking about, the first rate cut could happen October, November, or December. We were laughing. We were absolutely laughing because wait a minute, we're not done raising. And we were absolutely correct in May. They paused in June, but we said, hey, look, it could still be 1 to 2 more. What did the Fed come out and say? 1 to 2 more, and it's like better than an 80% chance they hike next week. The next meeting is in September. I don't know if they're going to do another one or not. My point is, the Fed has been telling you higher for longer, even if they don't do another rate hike after next week.
Yeah, it's going to stay where it's at.
It's probably going to be there for 9 to 12 months, unless we get some, quite frankly, domestic or geopolitical event happen,
Mm.
right? It will stay higher for longer. That means the banks will be lending less. So I guess that's a good segue to the next part,
The next
which
piece,
is all the headwinds, right? Most of
sure.
these we've talked about to ad nauseum, over the last 3 or 4 months. But small businesses bankruptcies have spiked. The big one that I don't think we're going to see pan out for a few years is, since the commercial property occupancy rates are way down, especially in major cities, many of their big payments or maturity on those loans are coming due in the next 2 to 3 years. If
Yeah.
they're not getting the cash flow, are they going to just leave that property and the bank's going to take it over? Because we all know the banks don't want the property,
No,
right? They
of course
want the
not.
cash flow.
Yeah. Well, and I
So,
think the interesting thing, if you looked at, I mean, most of the big bank earnings, I mean, we just seen a bunch of them this week, Bank of America and several. I mean, they look really good. And they're, of course, I think they've been a net positive as far as inflows of capital and everything else, or depositors from the regional banks. But
absolutely.
did you see the numbers on Goldman Sachs? I mean, they missed huge, and I think that's more internally issues at Goldman Sachs. But commercial loans and their commercial side of their business really got hammered. On top of their I think they took a massive write-off on their commercial, or their like individual loans, or personal loan type stuff.
Well, I think I did see a chart on Goldman Sachs as far as their earnings growth year over year.
Yeah.
It was the worst since COVID. Forget about COVID, but it was the worst in like 15 to 18 years. And Goldman Sachs are supposed to be the smartest ones on the street next to Blackstone. But yeah, I mean, if they can't figure out how to make money.
Blackstone got hammered this morning too. So
they did. Well, they did, but you know what? Both of those companies, without giving any advice to people, both of those companies will figure a way out. There's just no doubt.
Yeah.
They're the Silicon Valley of the financial of industry. They will figure it out, especially Blackstone, because a lot of their stuff's in property. They'll figure out how to refinance with the banks. Whatever it is, they'll figure it out. But we talked multiple times about the student loan moratorium ending next month, credit card balances, higher Fed interest rates, and tightening in all the banks. So yes, the banks are lending, but unless you have like superior credit and a long-standing relationship with that bank, the banks are going to do less and less loans. And or unless a business is desperate for money, they're going to pay higher than the average rate. That's just the way it's going to be.
Yeah.
Earnings are flat to negative for the 5th straight quarter. The bond market is always has been where the smart money has been. They're still flashing recession signs. Look at the 2 and 10 year it's over a 1 point difference again as of this morning.
Yeah.
We already talked about the Fed rate hike. It's expected to stay higher for longer, right? We already echoed all this stuff. And then here's the big one. And this is now what finally some of these people that had their come into Jesus moment about the market just going straight up, is the fundamentals are finally looking stretched. Well, they were stretched 3 months ago.
Yeah.
Right. There's been pockets. Actually, there's still quite a few public companies out there that actually are good value right now. They haven't been stretched, but the most of what's been moving the market up, their fundamentals are absolutely stretched. Their PEs have gone up almost 30 to 40% in the last 6 months. So it can't continue. Somebody's got to either say, stop adding money or take some money off the table, right? It's got to happen. But we obviously know the inflows from retirement plans and everything else will keep a lot of that top 7, top 10 stocks up. Yeah. What do you think on the headwinds? Because we've talked about some of these multiple times. But what do you think are the top 2 or 3 that you think may be the big catalyst?
I think the lending from banks, I think that's going to be there. I think there's a spillover effect. So you have the lending from banks, which is affecting small business bankruptcies, because it's just, if you don't have access to capital and you need it and you can't find a method to get it, or if you get it, it's so expensive, you can't afford it. I think that's a major effect. I think, quite frankly, and we'll be talking about this more. I'm actually going to interview somebody for the show here, and then in about 2 to 3 weeks that is working with a company that there's actually 71 programs in the federal government where you can actually reduce or eliminate your college debt that are available. They've been available for the last 30 years. It's just nobody knows about them, and they're impossible to get unless you have somebody that knows what they're doing. And the company that he works with actually does this. They basically help people get through this. So I think the administration's ability to get anything done from the student loan part, and I look at it from the perspective of, okay, if there's a program available, yeah, that's fine. But just doing this mass, okay, we're going to get rid of it. Well, I mean, I didn't have school debt. I went into the military and I spent 5 years of my life all over the world, living through hell in some cases. I paid for all my own college by myself. So why should I pay for somebody else's college?
Well, don't forget too, I mean, what they were trying to pass was up to $10,000.
Yeah.
Now, somebody that has $150,000, it's
like
not going to put much of a dent in that.
Yeah.
But but you know what? You made a commitment, you got to pay it. That's what it comes down to.
Yeah.
Obviously, if there was a medical situation or whatever it may be, I get it, but you still made a commitment.
Well, but I mean,
which is another reason we all know that college education is completely overpriced anyway.
Oh yeah.
The only people that make money, the professors make next to nothing. It's the top administrators that are making it, and they want that tuition to keep building buildings.
Yeah.
You go on any college campus, they're building another building. That's what they keep doing.
That's what they
they need it.
And when they finish that one, they'll build another one and another one and another one. And it's between that and the money that goes into the sports programs and everything else. I mean, that those bring revenue into the college. But yeah, I mean, it's unsustainable for the rate of growth of college, and a government handout basically, or a forgiveness of that is just it's not going to improve the situation until we do something to kind of get control of that a little bit. Now, I will say one thing in the college world that I do have a lot of faith in is more and more people are looking at online programs and stuff like that. And I mean,
they're not cheap either.
Yeah. And I mean, I think that's the big differentiator. Yeah, you might, you can go back to school, not have to have this campus experience. You can work and actually do school. For some people, that's a good solution, and it can save a crap ton of money for somebody. So I think there's some innovators out there that can kind of break the system a little bit. I mean, I went through a program through MIT. There's no way on earth I would pay the money to go to MIT, but I have a MicroMasters in finance from MIT that cost me probably $2,000 total, and I mean, it gave me the training that I wanted at the time in that, and I'm qualified to actually go through a full master's program at MIT. Why I would want to do that, I have no idea, because it would cost me a fortune to do that. But, I think there's other alternatives today to get an education. It's just people have got to, people have to think of that as a business and make business decisions around it, not make decisions based on, oh, it feels good, or let the 18-year-old make all the decisions as far as how they're going to spend their money. They don't know how to do that yet.
No, I agree. Yeah. Well, I mean, some of these economic factors, eventually they've got to come to a head.
Yeah.
We can't figure out when that'll be, but you keep adding all this up, and if things don't improve, eventually it's not just a crack, right? Yeah. It's going to be a cascading effect where one thing is going to affect another, and I'm not wishing for it, but I think there's going to be a geopolitical event. Yeah. That's going to cause something, and I don't even want to suggest what it would be.
Yeah, that's typically what ends up happening, is we end up with some kind of a huge terrorist event or something else, another conflict or whatever. I
think it's going to be China.
Yeah, well, I think it's going to be China, or the whole Ukrainian situation kind of pulls more people into it, and we're dealing with it. Because I mean, I think this morning I just heard something that the Russians attacked Odessa and destroyed like 40% of the grain that was in the port of Odessa. Well, that doesn't affect us at all, I heard something the other day. It was
affects Europe.
interesting. There was a guy on I think Fox Business that was talking about this, and he's like the guru of agricultural futures trading and stuff like that. And he said, because it doesn't really the grain in Ukraine doesn't affect the world very much, but 25% of that goes to China. So now Russia's just destroyed 40% of the grain, of which 25% of that would have gone to China. So that might cause some hassle between the two players there. But the majority of that grain from there goes to Africa. And, you're talking about people starving to death in Africa because of this.
And I heard an expert on two experts on China in the last 2 weeks. One of them was talking about China has been hoarding grain for years. And when many of much of their population was starving during COVID, they never touched any of those grain reserves. Why would they do that? Are they expecting some kind of a cataclysmic event that is beyond their population starving, that they can't touch the grain? I don't know. That's kind of, it's a conundrum. Like, why? Think about it. Why would that happen? It doesn't make any sense. And their economy, if you believe any of the numbers, has been slowing down. They're building these ghost cities just to keep people busy, but they don't have the economic growth or infrastructure to sustain any of it. Now they're talking about Saudi money coming in to build more ghost cities and highways for their population growth, but what is that actually doing? I mean,
but if you don't have,
it's interesting listening to these points of view, because certainly we're not experts on China, but some of these people are able to track this stuff, and they're like, something's going to happen.
Well, and I think the other part of it too is, I think the realization that came out of COVID was how reliant we were on China. And, I think you're seeing a massive shift in a lot of these companies as far as where they're going to start building things. And that's not something that overnight you just say, okay, screw you, China, I'm not going to do business with you anymore. We're not going to build things there. But I can see companies going, all right, we're going to rebuild our supply lines a little bit in other areas. And, that has a massive effect on them being able to employ people in China.
Yeah. Well, listen, I don't wish for it at all, because I think it would just have catastrophic consequences on the world in general. I think if China invaded Taiwan, Europe would ostracize them. China's economy would be in the dumpster. If they did anything, either supporting Russia or invading Taiwan. Think about how they supply the world in manufacturing, especially forget about our country, Europe too. And they would be cut off. They would go back into the dark ages. Yeah.
Well, you become a pariah state at that point. And, then it's okay. What do they do? Is it a Japan during World War II thing where, okay, everybody started cutting back on them and then they struck out to do that? Or, is there an internal strife that happens? I just don't. I think that the Chinese Communist Party is just way too strong for people to take over. We've seen Tiananmen and stuff like that, but that was, they've always been able to put those type of things down.
They have the ultimate Gestapo.
Yes, absolutely.
So it should be interesting. Well, who knows? We'll see how things go. By the time we do our podcast next week, we'll know about the next Fed rate hike.
Yep.
We'll be at the end of July at that point, 2/3 of the way to the summer, if you could believe it.
I know.
But it should be interesting to see kind of how August and September start to pan out. Well, I think however August and September pan out, I think that'll be the direction we go to the end of the year.
Yeah. And like I said, I think from my perspective, I think from what I'm seeing, reading the tea leaves right now, I see the market still having a run, going into the second half of the year. I just don't see anything stopping it right now that I can see. Some of the areas that I was down on, like finance, the financials and things like that, I've had a little bit of a shift in my thought process with those because I'm seeing actually really good numbers coming out of them.
You know what? You've seen the numbers out of the mega banks.
Yeah.
If you look at the chart on the regional banks, they are still struggling
Sure.
mightily.
Yeah.
Mightily. As a matter of fact, not they're at 52-week lows, but they are still in a downtrend.
Yeah. Well, but I mean, you see most of the, I think most of the funds that I invest in, they're dominated by the large major banks. So
Right.
the regionals play such a small part of the, there's the stock market side, and then there's the actual real world of businesses. And yes, they do most of the lending, but it's the, people invest in the big banks. And,
But here's the bigger difference though with that, Jeff. Look, we know it'll never happen, one of the top banks failing. Nope. Right? I mean, we know that because, if the government came and backstopped the 16th largest, and they were a fraction of the size of the top three,
yeah,
the top 3 or 4 are not going to fail. My point is that our economy could withstand 1, 2, or even a half a dozen regional banks failing. We could. I mean, it would hurt. We would worry about the cascading and contagion effect. But if it's widespread, it will have an effect, because that means the big banks will get bigger, and we don't want that to happen.
Yeah, absolutely.
So,
no, like I said, I mean, I don't know when that, we talked about those headwinds. I don't know when the commercial side is going to have some effect. I've not seen it necessarily having effect. I think the effect on the regional banks has been the, I think that people were complacent. They left their money sitting in those regional banks. Yes, they could make more money outside in treasuries or whatever. That one little blast in March of a couple of big failures, I think people made that look of, oh my God, wait a minute, I've got to get my money out and get it someplace else. So I think there was that move into money markets and everything else that we saw. But, I think they're going to still be in trouble for a while because they're just not getting the cash inflows, but the big guys are. And
well, the other thing that I had heard, and I heard it from 2 different people, and I can't remember the exact number, but they said one thing that the regional banks are significantly at risk on is they more than 50%, I think it's closer to 70, 80 or more, 60 to 70 or more percent of the total loans that they have out are commercial property related.
Yeah.
So they're holding potentially negative paper.
Oh, I'm sure they are.
But again, that's going to take a few years to pan out.
Sure.
I mean, I don't know if they're going to be able to unload it. And if they unload it, it's certainly not going to be at fair value. So that means they're going to have to take write-offs. How much is that going to affect their balance sheets? How much is that going to affect their stock price and earnings and everything else? They got to de-risk. Well, they're going to have to take a hit in order to de-risk. And then at that point, who's buying that paper? Now, what are they going to do with it? It's basically just, it's a hot potato that nobody wants to hold.
Yeah, absolutely. Well, we'll continue to see it and continue to talk about it. So, folks, thank you for spending time with us. Certainly, we love comments. Please share anything that you guys think of and would like to talk about or like us to talk about, because we make sure we do that every single week. And make sure that if you like this, share it with somebody else that could utilize this information as well. So we'll see you back here this very next week on Thursday.